The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, this is the commodity show. Well, tomorrow is the commodity show. You're going to have to bear with me today, folks, because I've had some major computer problems with viruses and data problems and stuff, so it's been a real challenge today, to get some of these things ready. As a matter of fact, it wasn't until about 15 minutes ago I knew I was going to be able to be doing the show because I didn't have a connection with this computer that I use to do the TFNN show. Okay, we're going to start the show today with a very, very important pattern, in my opinion. This is the Dow Jones chart. Goes back, it's a 30-minute chart going back the last 10 trading days. And as you can see, if you'll take a chance and look at this, it's very, very informative, in my opinion. It has the 1, 2, 3, 4, 5 expanding triangle that we look at. That's known as the T6 pattern in Gartley's book. But what's interesting about this, it has two of them. It has one that formed since the 18th of July, and then the other one that has formed since the 26th of July. And it's really amazing that it's able to all come together today. That tells me that we have hit something of a major importance here in stocks, because they're looking at the Dow Jones. This is what's on the TV, and this is what everybody is looking at. But ladies and gentlemen, I really believe this, and I want to give you an idea that is not what is really happening. If you will look at the New York Stock Exchange Index over that same period of time, it is a totally different pattern. We have lower highs ever since the full moon of July the 22nd. And, the Dow Jones has gone up and made new highs. The S&P has just about matched the old highs. So that's telling a totally different story. I could be totally wrong here, and I'm wrong quite a bit, but this could be one of those times where I'm also correct. If we get above 16,000 in the Dow today or tomorrow or the next day, then all this is for naught. It doesn't mean that, this market will probably ever go down. There's some really smart people out there that are talking about, the market going up another 50 or 100% from here. Primarily Laszlo Barini of Barini Associates, and then also Jim Flanagan, who happens to be a very, very smart GAN guy out of Santa Monica, California, and he's also looking at something just incredibly bullish long term. I certainly don't see that. I'm looking at this expanding triangle that we've shown on this show so many times. I just don't want to show it again, because every time I show it, people say, why do you keep showing that? Well, I keep showing it because it's forming, and it's just a very, very important one. It's the same type of pattern that we had in 2000 to 2007, and we're having it again now, and markets repeat. So you've got to be a little careful in here, is my guess. But whether that's going to be the case or not, I'm not sure. I would like to tell you a little story. A lot of you folks don't know my background, but during the early 70s, from 69 through 72, 73, I was trading commodities at Conti Commodities in Southern California, where there were 5 market wizards trading out of that office at that time. The Ed Secota, Bruce Covener, Mike Marcus, Jay Silverman, and Rick Barnes. And I mean, it was just we were all young. I mean, none of us were known to anybody or anything like that. But there were a lot of people there. We were all making considerable amounts of money, because it was during the Russian grain robbery. And the grains just went up almost every day. They would have 3 or 4 day corrections, and I would buy those, and they would go up. Well, this all ended around the 28th of July in 1973. That pretty much was the end of the of that big boom. And from that time on, over the next 18 months, I had given back I've given back everything that I had made. But I had taken, quite a bit of money out of the markets at that time. But the story I want to tell you is this, because you talk about the ups and downs of the market, and I've had those many times through the years, and this one is most memorable because I was standing in the parking lot of a big shopping center that just gone up in Beverly Hills, and I had just bought 2 brand new automobiles, and I had a new Rolex, all the little toys and stuff. And I actually had tears in my eyes. I remember this. I said, my God, here I am, just, I'm 30 years old. What am I going to, I was 33. I said, what am I going to do when I, what have I got to look forward to? I got over $1 million in cash. I got 3 great kids, a couple, a house. I mean, all the stuff that, anybody could want for. And I was just really feeling, really despondent after all this success. And believe me, that was the high day. That was my uptick. And over the next, 18 months, I learned the greatest lessons in the world, and I never would have learned those if I hadn't have learned the humility that comes from the markets. And the markets do give you humility if you're not prepared to, change your mind. And this is where, we are in the market today. I'm looking for something real ominous to happen, very similar to what happened in 2000 and 2007. I think this could be the biggest one of all. And the reason for that is that these long-term patterns that we have in the stock market, they're just incredibly bearish. And I listened to Basil talk about copper, and that's always on the back of my mind. If this is really great and things are so good, why isn't copper rallying a little bit? I mean, it's used in building supplies, automobiles, telephones, TVs, everything, anything that's electronic, copper is used. Why isn't this, commodity being, picked up? Have they found a replacement for copper that we don't know about, much like they did with, silver with photographic supplies and, Eastman Kodak? I don't know, but, you've got to ask yourself. The good part of that is if this is a big bull move and the market does come out of here, copper is going to offer some great buying opportunities because nobody is stockpiling copper because it's too cheap. Nobody wants to own it because it's, near multi-year lows. It's been going down for 3 years. So that would be a good buying opportunity, if we get to that point. So we'll see if this is going to be happening or not. We have some a couple of things happening in the commodity markets today. We've been waiting for a sell-off in the gold market, and we've been able to get it very, very close to the level that we wanted to buy it, down at that 1,300 level. I think we got down to 1,305 or something, and that offered what I think is a pretty good buying opportunity in gold, and we'll take a look at that after we. In fact, we should take a look at it right now because we have the time to do it. And we want to be able to do. I know it's a commodity, but it's something that we watch all the time, and it's something that we believe is going to be a pretty good value because I think the major bottom that we made here in the gold back on the $1,170 per ounce level is going to be very, very important. But we've come down and we've made just a nearly perfect 61% retracement off of the other highs. It's just been just pretty much spot on. We missed it by about $3 this time, much like we missed it at 1170. So it looks like we have a really good chance for the gold to start a rally somewhere around this $1,300 level. We took out the lows of last week, which was around 1308. We expected that to happen. And now we've completed this really nice AB equals CD pattern coming down in gold. It's been perfect because the rally back went up to the 786 retracement at that 1338 level. And now we're getting ready this is our second major ABCD pattern that we've had since gold made its bottom back in April. And if you'll remember, I think it's important to put this up to let the folks know, is that when we were hitting that level in the gold at the 1170 and change, that was a 61% retracement off of the low in November of 2008. And this is a really major ABCD pattern that we had happen. We did hit the 50% level, and we rallied over $100 and some. and now we've hit the 61% retracement. We've rallied exactly the same amount. The first rally off of the 50% retracement, back in April was $170, and the one that we've had now in the last 2 months has rallied also $170. So we're at a real critical level in this point, and that's what we're watching about. This would be another potential buying opportunity for the gold mining stocks and silver mining stocks, if in fact we're going to be looking at this huge bull market that some of these folks are talking about. We'll see if that is going to be the case, but I have to wait and see the Dow get above that 16,000 level, and then I would have I would say, well, this is where you have to separate a place where you it's much easier to eliminate stupidity than it is to try to gain billions. And I think by getting out of the market from the short, and believe me, I have a very small short position in the S&P that I put on the 23rd of of July, when we had the full moon at that point. And so far, it's basically pretty much exactly where it is. But the big moves that we've had here have been with the currencies and with the treasury bonds and with the gold and with crude oil. Those have all been really nice downtrending markets, especially in the gold and crude oil over the past few days, and it's given some wonderful opportunities for selling short and not risking very much. We have a potential, really, the same pattern that we looked at in the Dow Jones Industrial Average, that expanding triangle pattern that we're looking at. We could be looking at that same pattern in the U.S. dollar index, and also along with the euro, because the euro has the potential to make the 133.40, and I believe that would complete that expanding triangle. If we have time after the break, I'm going to put that chart up to show folks, how Forex trades, and the fact that it's the largest market in the world. It's thousands of times bigger. It's very important. One other comment about the Dow Jones, when I showed the pattern up there, that's not the real market. The real market is that New York Stock Exchange index, or if you want to take a smaller one, would be the S&P. But the Dow is only 30 stocks, okay? The New York Stock Exchange index is over 6,000 stocks. It's 200 times bigger than the Dow. Not only that, it's capitalization weighted. The Dow is price weighted, so the price of IBM is a lot, has more weight than it does for Hewlett Packard or something. So these are the things that you got to keep in mind, because this is what the financial pundits talk about, is the Dow Jones Industrial Average. That's the one that's been around for 100 and some years, whatever. We didn't have the S&P until the 1950s, and so that's the one that they talk about. But that's not the real representative indicator of what the stock market is doing. And remember, it's a market for stocks. It's not a stock market. Each one of those stocks, operates to the tune of a different drummer. Just look at Google and Amazon and Apple. Look at the difference between those. If you'd had a spread, long Google, short Apple, you'd have made an absolute fortune. Okay, we're going to take a break here, and then we'll be back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay. We're back, folks, and I think we have a caller from our friend in Philadelphia. John, are you there?
I am, Larry. Good morning to you. From the sounds of your voice, Larry, I'm gonna guess you were trading half the night. Were you?
More than half. The other half, I was fighting with the computer, and I tell you, it was a total disaster. I had a problem with some spyware or something infected one of my computers. Fortunately, it wasn't the trading computer, but I had to spend so much time trying to correct it that I was up quite a bit of the time, because we're having, well, first of all, I was short bonds and bonds and gold and crude, and so I had to be watching it. But it was just frustrating as heck. And then this morning, it wasn't until 15 minutes before game time here that I was able to log on to this computer to even do the show. So it's always a challenge with the computers with me. They don't like me.
Larry, can I speculate correctly that when you wage war with a computer, you rarely win?
I never win. They don't like me at all, John. Honest to God, they really don't.
Say, Larry, I wanted to speak to you about the metals and the miners. I first will just harken back to the program you did on Wednesday and Thursday last week. And gold had made a high up near 1348. It had pulled back on Wednesday, Thursday. It was bouncing, and I remember vividly, you speculating that gold would peak out on the very, very short term, say 1335, and that you would then prepare if the opportunity presented itself to buy, and lo and behold, it's pulled right down just on Bernanke Day and the employment report on Friday. So I see that's doing very nicely. I will tell you on the miners, the HUI and the GDX, from a risk management perspective, the GDX has come right back down to a gap that was left on Sunday and Monday. That would have been the 21st, 22nd. So I see a good low-risk entry there. So golden, the HUI, I think I have a handle on. Silver, less so. As you know, silver's been weaker in this rally phase, and I wonder if you could pull that up for us and what pops out, given the Pesavento patterns, where the buy is, and more importantly, where you'd place a stop loss. I just don't see it, frankly.
Well, it's very difficult to see because, what I've done is into Tiger TV, I posted the 60-minute silver chart going back to July the 7th, and it basically shows, the 1 month low, and now we're making our higher bottom here at the $19.40 level, which is 61% retracement off of that July 7th low. And as you can see from this chart, gold is incredibly stronger. I mean, gold is barely making a 61% retracement off the low of the 17th of July. So gold would have to be all the way down to around $12.60 an ounce to make that same type of correction. The question that we all ask, John, and I know you and I, communicate by email about the open interest in silver and gold, is that, the lack of participation that we're seeing. And now we're seeing, things in the news about, these companies getting out of the metals business, the metal storage business. And that makes me, it's very, very troublesome to me, because here they're getting out at a time when there are rumors that there's not supplies like they're supposed to be there. And I don't know if these rumors are true or not, but, it just doesn't make any sense to me. And then the most, I hate to get on my little soapbox here, but stay with me till after the break. I want to cover this. Yeah, I don't know if you folks watch about what happened with, J.P. Morgan yesterday. They were fined $400 million after doing insider trading and I don't know exactly, manipulation of the energy markets in California and Michigan and a couple other places over a 4-year period, and they were fined, $400 million. The question I ask is, how much money did they make that they could pay $400 million like it was coming out of petty cash? There's something wrong.
Isn't it convenient how that figure, what they made, is never divulged?
No, they don't do that, and this is what's going to happen with SAC Capital and Steve Cohen. Yep. He's the most profitable trader. He's a great trader, probably the greatest ever. And they're coming after him because of his lifestyle, and I'm sure he's had some lapses in things like that. But by gosh, I don't know. I don't know if they're going to be able to catch him or not, because I don't personally think that, a man that's got a couple of $1 billion, what does he care about insider trading, in my opinion? But, hey, Milken had that much, and he did the same thing. So, the same thing could happen to Milken that could happen to Steve Cohen, too, so we don't know.
Say, Larry,
John, we got to take a break. Stay with me, my friend. Will you stay with us after the break?
Certainly,
okay,
yes.
We'll talk to you then.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, and we're talking to our friend John from Philadelphia. John, I had one other question, and I know that you usually have questions for me, but I have one for you. I know you're one of the best technicians that I know. What's your take on the bond market that where we are right now? We've had such a marginal rally coming off of that 61% retracement on the weekly charts at 132. Are you seeing anything that makes you interested?
Frankly, Larry, I shorted the bonds a week ago Monday. That would have been the 22nd. I remember the preceding week on your show you had mentioned how the bond futures, the 30-year bond futures, the ZBUs were lagging the rally in the T-note futures, the ZNUs, and how the bond futures had rallied up to, but really not exceeded the Fib 786 mark. Versus the high that occurred, I think that would have been July 2nd or 3rd. Anyway, so I had shorted the bonds there, and frankly, I'll just share this with you. You and I are trading from the very same vantage point on the longer term, believing that July 25th, 2012 high up there at 153 on those bond futures was the secular bond top. On the shorter term, Larry, my kind of view is the following, that the peak that occurred on May 1st, I think that was a Wednesday of that particular week, that the decline phase from that peak is still in progress. And the low thus far has been, 132 or so. And frankly, I'd been speculating that that decline from May 1st, and that would have been up near 148, 149, I believe, would run its course and complete itself with a bottom somewhere near 127. And frankly, all the action that I've seen thus far fits with that. And if in fact 132 breaks, getting to 127 or so, at that point, Larry, I kind of speculate we'd get a multi-week, if not a multi-month bounce in an ongoing and emerging bear market. So that's kind of my view.
Well, that's good. I'm pretty much we're on the same page on that one, and I wanted to thank you for calling in, and I'll be seeing you soon. So get ready, okay?
Very good, Larry. Right. Just one last thing I wanted to ask you on the silver. Thanks for posting that 60-minute chart. My question is this: yes, this low this morning at 1940 was precisely at the fib 618 mark, off that July 5th and 8th low. There's a lower low down there on June 28th, and when I look at a kind of a confluence calculation, I also see support down at 1910. So my question is this: if you bought it here at 1940, 1945, you as a trader, how much are you giving it before you're going to take a loss, assuming that you're wrong?
I don't see how you can trade less than 20 cents stops in silver, which is $1,000, because, as you know, it runs into pockets of illiquidity because it's a lot less liquid than gold. So I would say 20 cents would be the maximum. But you're right. You should wait a day or so to make sure that this downdraft has stopped. You know, we haven't rallied very much after we've hit this number, nor have we rallied much in the gold. So there's really not any way of, getting a very low-risk buy signal in either one right now. You have to wait and see if these levels are going to hold today.
Right. Larry, thanks for that. Let me mention one follow-up. You asked me, and I shared with you my thoughts on the bonds, and I listened to your comments right at the top of the show, where you mentioned Jim Flanagan out in Los Angeles and his bullishness on the S&Ps. What I will tell you is he has been successfully top-picking and forecasting this emerging bear market in bond, assuming it is a bear market. But here we are at 133, 132 on the bond contracts. Frankly, it sounds kind of, it's almost unthinkable, I would call it. But he is forecasting within the next 12 months that bond futures contract to see a print down as low as 105 for what it's worth.
Wouldn't surprise me, given the fact that everything that's going on in the world,
Yeah, indeed. Larry, thanks so much. I appreciate you doing the show.
Thank you for calling in. We've got another caller from Tampa. Justin, are you still with us?
Hey, Larry, it's Justin.
What can I do for you, my friend?
Can you take a look at the Canadian and the Euro?
Let's take a look at the Euro first, because we are actually waiting for something to happen here, probably either today or late this afternoon, early tomorrow, up around the 130. 320 to 133.50 level, where we have that reverse point wave pattern, that expanding triangle, in the euro based on the 30-minute chart, and that's also a very significant retracement number on the hourly chart. So that's what we're watching. But the euro gives you so many opportunities, during the day. Today we had a beautiful 3-drive pattern exactly at the 61% retracement. And I was in the midst of a computer battle. The computer was winning, and I missed the whole trade. So what I'm waiting for now is that area up around that 133.20 to be getting short in that ballpark is what I'm looking at.
From my work, I'm looking at just you have about a 78% retracement from the last leg down.
That's exactly what's happened. It's hit there 1, 2, 3, 4 times, and the question is whether it's going to go up one more time. to touch that, and I'm just waiting to see if it is going to do that, and that's just my style of trading. And what was more important to me today was the fact that I missed the easy trade, which was the buy down there at the 132.20 level, and it was my fault because I was busy fighting with the computer, and the computer always wins. So, there's nothing else that you can actually do with it. Now, you had another question about something else that was
the Canadian, which
sure.
I'm looking at all the currencies. They all look bearish to me, except for obviously the dollar and the yen.
Yes.
I think it's starting an uptrend here, and the Canadian's already broken. I know it's got a heavy correlation with oil. I think oil is top, but it still may make a retracement back towards the high.
Yes.
I'd like to get short that, but I think the Canadian's kind of already topped, as well as the pound and the Aussie have broken hard the past 2 days. So I think the euro's got to succumb to the selling. It just seems like it might have one more push left in it. But Canadian, please, if you don't mind.
Yes, I've just put it into Tiger TV, and as you can see, we're having this 135 higher bottom pattern, which is very, very important. And the cycles between May and June and August are coming into play right here. So we have really strong support in the Canadian at the 102 level, and we could easily have a rally. Gold, you mentioned oil, and oil is very oversold. It hit some pretty major support down here at the 102.50 today. So that's another reason where the Canadian could rally a little bit.
I'm looking at the Canadian now, the current September contract. I see 97.14. You mentioned 102.
Yes, that what that is now you're looking at the dollar versus the Canadian, and I'm looking at the Canadian versus the dollar. It's just a matter of if you invert that, if you add the two of them together, you're going to come up with 2.00 because it has to be 97. You add 0.2, you're going to be at 100. So that's all it is. It's just a reciprocal.
Yeah, so you're bearish on, I guess, the euro and the Canadian as well, then.
Yes, I certainly am. Yeah, especially the euro. The euro is I've been incredibly bearish the pound, as you know, from that 157 level, and I still think it's got a long way to go to the downside. And we've made a beautiful 786 retracement in the dollar index that we talked about on Monday. It's made that head and shoulders pattern. The euro is struggling up here, and it's been up for 2.5 weeks, so it's incredibly overbought. So it's ready for a big correction, starting in this area.
Yeah, seems like sometimes they're a little frustrating. Some markets move before the others. I mean, you got the pound, the Aussie in 2 days has dropped 350 ticks, and I think gold may actually take another leg lower too because it tends to follow the Aussie. But then the euro is real stubborn; it just hangs around. And frustration
is a good description of trading because sometimes you miss them and sometimes you get them when you don't want them. So it's just a matter of probabilities. And I was going through that today. I had a very good day with the exception of the euro that I missed. And but the rest of it was okay, and the computer's driving me nuts, though, Justin. I tell you, when I have a computer problem, I should hire somebody full time to sit here with me because it frustrates me so much that it affects my whole day, and I shouldn't have let it do that. And I've been fighting with it all night, so it's been an interesting phenomenon for me. Well, listen, thank you for calling in, my friend, and I hope you do again sometime. Okay.
Can I just do one last question?
Oh, absolutely. I'm not. We got plenty of time. This is our show, so we get to do what we want.
I'm looking at the sugar, which has been in a terrible downtrend for a while now, but the looks like it's had a short-term bottom and some big volumes come in. So I'm looking maybe if we get a good pullback, like a 61% retracement, I'd like to get long on the sugar. I mean, I know it's a downtrend, but it looks like at least there might be some, decent upside, kind of similar to the gold. Still a heavy downtrend, but relief rally in here.
Okay, I agree with that. We'll talk about that on the commodity show tomorrow because sugar was one of the things on our watch list at around that $16 a pound level, and we've had a nice rally from there. So a pullback there of 30-40 cents, which is around $400, would be a good entry point. So we'll be talking about that tomorrow.
Okay, perfect.
Okay, and we got another caller. Well, this is a lucky day. We got Lou from Nashua. Are you there, Lou?
Yes, I'm here. I was just wondering what the miners are going to do.
Which miner are you looking at?
Gold miners. No, the actual index.
You mean the XAU?
It'll be NUGT.
Okay, that one I don't look at. I'll put it up here. We've made I don't do the indexes with the miners, as you. In fact, I don't do anything with the stocks at all. But we've had a really nice butterfly pattern, 3-drive pattern forming in the NUG that stopped on the 25th of July. We've had a pretty good rally, and now we're having this very nice little pullback. And I think that at the level of around 6.30 to 6.50, $6.50 in this NUGT. It looks like it's going to have some pretty good support at this level. I'm just long term. I really believe that we got a chance for gold, to get moving here. And of course, the miners and all of the gold mining and silver mining have had just tremendous downtrends. But this is the place if you want to be looking to buy it. That we're looking in, right about here. So. Within about 30 cents of where that NUGT is, you buy it there, and if it goes below, 5.75, I would get out of it.
Okay. Thank you, Larry.
Thank you for calling in. Okay, we got another call.
Bye-bye.
Yeah, thank you. We got another caller from Atlanta, Georgia. Are you there, Charlie?
Yes, I am, Larry.
What can I do for you?
I am very sorry that you're having a problem, but I might have a solution. I was in the computer business for more than 25 years. And I found, I'm still using it now. I don't know if do you use Norton antivirus?
Oh, I have a specialist, and that was the problem. I had been infected, and the one that I'd been using, Avast, had just not been able to cut the mustard from the new viruses that were out there, and they've got it all fixed now. So I'm pretty much okay. So that's where I'm all right now.
Yeah. By the way, Norton antivirus not only fixes spyware and things like that, it also fine-tunes your computer as you're working through the day.
Mm-hmm.
So if you got to solve, good. I hope you don't have any more problems because I hate problems.
Oh, me too. What can I do for you today, Charlie?
I'm calling about Priceline. I
Sure.
just recently started shorting it,
mm-hmm.
and it looks like it's in the right direction.
I don't. We've made a huge ABCD pattern, from the 418 level all the way up to the $933 level. It was a perfect ABCD swing. It was amazing. You went from $400 to $740, $350, and then you just did the same thing again, from $600, taking it up to the $900 level. And so it's, but who knows what's going to happen with these stocks? I mean, it's, I never in a million years thought that Priceline would get this high. I happen to be following it because I happen to know William Shatner, and of course he's the spokesman for this, and he was paid in stock. I don't know if you know this or not, but he didn't take a salary for all the advertisement. He was paid in stock, and it paid him a lot of money. So, and he's a nice guy, so I was glad to hear it. But I agree with you. I think the short side is the way to play it. Right now it's a little bit oversold, but I still think it could easily, the last time it corrected over, $250. So you could easily get, moved down to $700 without any trouble at all in Priceline, and it could still be bullish.
Okay. I kind of agree with that. I just wanted to, but you think it's the 700?
Yes, I think, well, the last correction went from 770 down to 560. That's $200, and the high here was, 920. You take 200 off of that, that's 720. That's your $200.
Mm-hmm.
Okay?
Okay.
Thanks for calling in, Charlie. I appreciate it.
You're welcome. Bye.
Okay. We'll take a little break here, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I wanted to show you that the T-bond chart that we're talking about on the long-term weekly basis. And you'll see that that 132 level is very important. And remember when gold was testing the first time at the $1,650 per ounce level coming off in 1900, had these very shallow rallies, and that's what could be happening in the Treasury bonds. I'm not sure if this is going to be the case or not, but I think it's very, very important. This is a very, very long-term cycle going back at least 32 years that we're looking at here. And one of the charts that I wanted to post into the Tiger's Den is one we've used before, and that's the long-term chart on interest rates that goes back to 1790, right after the formation of our country. And it shows that interest rates, are down to the levels that we were, during right after World War II. And it's really amazing. Now, I happen to be right in the midst of the when it was making the high up there in October of 1980, and we were looking at inflation at around 17% and T-bill rates at 14%. And stuff like that, and now it's the total opposite, and we have the Fed dumping money in all the time. But these charts, they have a tendency to change. We know that we've made the long-term butterfly pattern in the 155 level. Well, we assume that we have, because we're down quite a bit over the last 9 months, but we did that 13 months ago. We topped in the bond market up around that 150 level. And now we're backing off. So we have to watch the quality of the rally that we're having here in the Treasury bonds. Now remember, folks, I know the Fed gets a lot of press and they can do a lot of things and they can move the markets around for a little bit, but overall, in the overall scheme of things, they are not going to be able to change where the markets are supposed to go anyway, because they're not that powerful. They're very powerful, but they're not that powerful. So this is something, and believe me, they have played a lot of cards in this deck. So whether this is going to work or not, because it's a giant experiment, and we have college professors running our Federal Reserve. It's not our Federal Reserve; it's the Federal Reserve of private banks. We have nothing to do with it. It's a private corporation, and we are at their whim of what they want to do, and there's nothing we can do about it unless they repeal the Federal Reserve Act that came out in 1913 from Jekyll Island. So that's what we're watching in the Treasury bonds. The long-term cycle in the bonds is very, very bearish because of the pattern that that completed. I'll bring that up to show you that it was such a incredible pattern that we had at that point. We had a beautiful butterfly pattern forming up in mid 2012, and then we'll see. Someone texted me and said, will Bernanke be deposed? I don't know, but I've always said that this is going to be a cycle similar to 1836, when we had the banking panic that led to the demise of the Federal Reserve back in 1836, over 170 years ago. That's the cycle that I looked at, back in 2007. But, I didn't expect the market to make a new high from 2007, and it certainly has. But the way that it did it is just like it did in 2000 and 2007 and what it's doing now. So this is it. We've got a lot of people that, have put a great deal of money in the market via the Federal Reserve and other things. So we're going to find if this is going to be the case or not. So 16,000 is my call uncle thing in the Dow. If we get above that, then I would certainly think it. But we've had really lower highs now in stocks, so we'll see. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.